Assalamualaikum and good day to everyone. So today I would like to share with you another common task suggested solution for April 2019. Question 2 MFRS 138 Intangible Assets. So question 2A1, the accounting treatment for research and development costs centers on the probable of amount of future benefits to be derived and the degree of uncertainty attached to the estimate of the benefits. R&D costs are normally treated as a period expenses and charged to profit or loss in the period they are incurred. If, however, the uncertainty can be removed and the benefits can be reliably estimated, the R&D cost should be capitalized. So this is a statement for question 2A1. So requirement, briefly explain the accounting treatment for research costs. Research costs should be expensed off to SOPL because the amount of future benefits from research activities is actually too uncertain to be established, right? So any expenses or expenditure incurred during the research course, you don't have to think too much about it, just expense off to SOPL. Next, development costs are treated as an asset if it fulfills all the 6 criteria for capitalization. List any 2 of the criteria. So here, I've listed all the 6. You can choose any 2, right? So technical feasibility of the project, its intention to complete the development, its ability to use or sell the intangible asset, how the intangible asset will generate probable future economic benefits, the availability of resources to complete the development, and its ability to measure the attributable expenditure reliably. Next, Simsung Berhad involved in research and development project which started on 1st January 2016. Development work began on 1st August 2016, but only in the early January 2017 the company is confident in completing the project and the marketability of the new product. Development activities completed on 31st December 2017. Commercial production began in January 2018. The company expects the product will be in the market for at least 10 years. The following are the research and development costs relating to the project. So the particulars you have there is research costs, survey costs, salary of the research assistant, the costs related to the research activities. Right, so development costs actually started on 1st August 2016. Okay, so you have to note here that the research phase started on the research phase started on 1st January 2016, right? So 1st January 2016. Next, development work began on 1st August, right? Development work began on 1st August, but only in early 2017. So early 2017 only you seem that the company is confident in completing the project and the marketability of the new product. Means that during January 2017, your development cost met the criteria of capitalization, right? So the development cost that occurred from August 2016 up until December 2016 still not complete or satisfy the recognition criteria, capitalization criteria, right? Okay, so development cost started on 1st August 2016 until 31st December 2017. Right, so material cost incurred on prototype product is 5 million. So depreciation of equipment used for development activities 100,000. Services of consultant used in the development project, 2 million, right? And legal fees to register a trade design, okay, is 45,000. So you have to note here also that development activities completed on 31st December 2017 and commercial production began in January 2018. Commercial production, okay? So what happened if the commercial production began in January 2018? So remember that I told you in class, if there is a commercial production, means that in that particular year you have to provide for amortization of the development cost that you have capitalized just now. Okay, let's read further. Additionally, the company has developed internally generated customers list. So this is another type of intangibles, okay, intangible item, which the management estimated the cost in 2018 was 50,000 ringgit. So remember that this is actually internally generated, okay, internally generated customers list. Okay, so the company also own trademark. Okay, this is another intangible item which was bought in 1st January 2013 at a cost of 675,000. No amortization was provided because the company is expected to generate cash flow for indefinite period. Okay, so no amortization, indefinite period. Right, next, on 1st July 2018, a market assessment showed that there was a decline in the trademark value. Decline in the trademark value due to new competition from foreign companies. So what is this? This statement shows you that there is an indication of impairment. Okay, indication of impairment. As at that day, the present value of future cash flows for trademark was 600,000 and its remaining economic life was estimated to be 3 years. So the company amortized its intangible asset using straight line method on monthly basis. The financial year ends on 31st December each year. So number 1, calculate the development cost that can be capitalized. So let's look at the development cost that can be capitalized. Okay, so you have material, which is 5 million, right? These all the, again I look okay, these are all the development costs incurred during the development phase, right? During the development phase, you just add the total first, get the total first, right? So material of 5 million, depreciation related to the development cost is 100,000, consultant fees 2,000, and then legal fees 45,000. So these are all directly attributable costs for that development cost. However, not all these costs can be capitalized. So how much to be capitalized? Development cost expense of will be for 5 months, which is starting from 1st August 2016, which is the date the development phase incurred or started, until 31st December 2016. Because on 1st January 2017, that they are confident of the intangible asset or the development cost meet the capitalization criteria, which is the directors confident in completing the project and the marketability of the new product. So therefore, the cost that can be capitalized is for 12 months, starting from 1st January 2017 until 31st December 2017. So therefore, the total cost just now, which is 7145, right? 7145 times 12 over 17, which is the total for the development phase, which is 17 months. Okay, so therefore the cost that can be capitalized is 5043,529. Alright, next, briefly explain the accounting treatment for the internally generated customer list. So for the internally generated customers list of 50,000 is to be expensed off to SOPL. Why is that? Because the cost cannot be distinguished from the cost of running the business as a whole, which it violates the identifiability characteristic of an IA. How do you know it is internally generated customers list? It does mention in the question. It is internally generated. Okay?